Hey everyone, what's going on? Chicago Trader here, checking in for the weekly fundamental video here on the 9th of August. Hope you guys are having a nice week of trading. Today's RKDA is moving a little bit, so I'm going to cover that. But one of the first things I wanted to get into was at the end of the last video. If you guys watched it last week, I cut off on kind of like what I track as far as after the market closes. What I wanted to touch on before I got into any specific names, in the morning when something pops up, an hour before the market, kind of, a quick 5 to 10 minute due diligence that I do. So, again, as usual, before I get into it, guys, this is not investment advice on my behalf and my C's behalf, so do your own due diligence. But what I've kind of thrown together is there was a few names that moved this week that I did, just a quick 5 to 10 minute due diligence on and kind of had a quick idea in the morning. Some of them do require additional research and kind of, what I would, call deep diving. But anyway, so let me jump into it. So real quick, so my quick checklist, I mean, it really is simple. Again, it's a 5 through 10 minute thing. And then if I feel like I need to look into it, I'll do that. Is the outstanding shares increasing? Recent dilution. Also, I'm pretty cognizant of like what kind of type of dilution is it. Like so if it's an ATM, I usually like those. Is it the first chance to use it? Is it a secondary? Are they warrants? What is it? You kind of got to, in my opinion, value them differently. Cash situation, and then you can also look at older dilution. Is there already an outstanding ATM? Are there warrants? Et cetera, et cetera. So what I want to do is there's two names that are very similar. They moved yesterday on the 8th, OSS and HEB, both really beating up charts on the dailies. But both fundamentally were pretty similar in the sense that they both had ATMs recently. So let me just pull this up. So OSS, they did an ATM. Yeah, you can see a little over a month ago. And if you pull up the chart, so that was just at the end of June. Oops. I'm going to apologize in advance. My mouse has been giving me fits today. It's not working too well. So yeah, you can see that they really haven't had a chance to use the ATM, since they announced it. Maybe got some off, I guess this day. But really, this is definitely in my opinion, you could consider a first chance to use the ATM, if not second. Definitely need some volume. So that's OSS. The thing with them that's going to be different from HEB, and the reason I like HEB, I'll get into it. So they had about $5 million of cash on July 1st, so, last month. And they're only losing, where are we? About $500,000 a month, right? Take this divided by 3. So, not in a dire need for it. But if you go to HEB, this one moved on some news. They had recently come out with an offering on the 22nd of July, so really recently, and it's up to $4 million, right? So equity distribution agreements, EDA, same thing, Maxim Group, $4.5 million. I like this one more just because they were in an even more strenuous need for cash. And again, the first chance to hit the ATM with some volume. So that, look, April 1st, we'll call it, they have $4.8 million of cash. You come down here and, divide this by 3, you got about $1.1 million burned. So here we are 4 months after April 1st, right? So you have 4 months worth of burn. So they've lost, $4.5 million, give or take. So they should be on less than a month of cash. And this is where I say you got to look at old dilution. So yes, they can use the ATM, but if they have, some warrants that are in the money because this thing's above $2 finally, that's how they use it. And another thing with this is when a lot of these companies, guys, the baby shelf can get, a little bit, confusing to some. It definitely takes some time, once you find the float. You kind of come back here and you say, okay, they can use the highest closing price in the last 60 days. So even though they have the ATM, like if they could, in theory, raise money, they can't. So HEB, I'll bring this up real quick. So you can see this closing day. Oh, my mouse. It closed at 676, and that's June 12th. So on Monday, it's going to be the last day that they can use that closing price, right? After 60 days, this right here, 560 will be the highest. So if they wanted to offer, they have, I think it was like 2 points. Let me see here. Yeah, so the float was 2.07. If you take it times that price, you get $14 million, right? 676, the highest closing price in the last 60 days. You divide that by 3, so you get $4.6 million they can raise. So let's go back here to the ATM, and they raised $4.5 million right there. Boom, no coincidence. So the reason also, this is important, guys, this is really their first chance to use it. And so let's say in theory they did not use it yesterday, all right? And then a week goes by and they have to use the closing price of 560 instead of 670, right? So, okay, let's just use 540. I apologize. So, let's say that they don't sell any ATM today or yesterday, and then they go to sell it and they say, oh man, we have to use this 540 closing price, right? Because this is out of the 60-day realm now. So now they can only raise 11 million. You divide it by 3 and it's 3.7. So that's kind of how I personally value them differently, right? OSS, the stock, didn't really need to hit it as hard. They have 8 or 9 months of cash. These guys are on fumes. They have to use this closing price in the next few days. I like this one more. That's kind of, my quick checklist. And then if these kind of don't tell the whole story here, some of the other things, delisting notices, those dates are very important. And again, this is a lot more deep dive into where you'll be spending 20, 30 minutes looking at it. So maybe after the close, I guess if you have time pre-market. So you start looking at, maybe some long-term debt, covenants, liquidity. You'll find some, old dilution in there. How much can they raise, right? I just kind of did the hypotheticals of HEB. And then, I'll get into it here in a bit. What price do they need? A lot of these, they can be close to the baby shelf, being unrestricted. Maybe they can only raise $2 million at this price, but if they close it here, they could raise an additional $2 or $3 million more. So those were the two, just kind of examples to go off a quick checklist if you want to do a 5 through 10 minute. So for me, I got an idea of which stock I like fundamentally, right? So again, for myself, you kind of pair which one up fundamentally makes sense to fade the most. And then for me, if I can find something technical to go up, it pops out the open, gives me a risk, then it kind of plays together with technicals and fundamentals and risk and all. Even as much as I'm a fundamental guy, yeah, I mean, you definitely have to, the risk and the price action side of things definitely trumps it. So let me get into the little bit more interesting one, RKDA. Haven't seen one of these in a while. To where the delisting, 99% of the delisting notices are for $1 bid. When I see that, you should probably not worry about it because what do? They reverse split, it gets cured. Yeah, nothing. But there are other obvious, delisting factors such as the market value. The stockholders' equity has to be a certain number. The net income has to be a certain number. So this one, if you pull up RKDA, you can see right here. So this is another reason why BAMSEC's awesome. You can see these pretty clearly instead of having to click them all. On May 20th, they received a notification letter from the NASDAQ stock market indicating that the market value of listed securities, so that's MVLS, was not $35 million and it was under that for 30 consecutive days. So once they get that delisting notice, they have 6 months or 180 days, right, until November 18th to regain compliance. So I got a question on this. Alternatively, the company may regain compliance with the rule if they meet the $2.5 million stockholders' equity requirement under the NASDAQ listing rule. So before I get into that, I guess I'll just kind of skip around here. The rules for delisting. So you must have $1 bid, right? So that you have to absolutely 100% have that. And once you got the $1 bid and you're okay with that, which RKDA is fine, you have to meet one of the following 3. Your market value of listed securities has to be $35 million. Your stockholders' equity has to be $2.5 million, or the net income for your company has to be $500,000, or it's in the latest year, or 2 of the past 3 years, you have to at least make $500,000. So again, a dollar bid, and you need to meet one of this. So that's why in this 8K, it says you can either meet this threshold or you can meet this threshold. It doesn't matter. You just got to meet one of them. And this company loses, $1 million a month, so they're not making money. So the net income, they're definitely not going to meet that. They're pretty close on this one. So let me get back into it. So I'm going through it. And for me, if you guys have watched my last videos, I use net loss, and there's a myriad of ways to calculate burn. And net loss is kind of a shortcut. It's probably not the best way, but again, when I'm doing these short, that's what I use. So if you came here, so when I first looked at it, if they're losing $12 million a quarter, you divide it by 3, they're losing, let's call it $4 million a month. But the reason I do this, and I double check it, if I come back here to the last two, and I pop in the net loss, and this is the 10K, so this is going to be for a 12-month, right? This is going to be, so they lost $13 million for all of last year. So that doesn't make sense, right? So when I looked at the most recent 10Q, it says they lost $12 million for the quarter, but last year they only, they lost $13 million. And then I actually go back to Q3 of 18 just to, quadruple check it. And yeah, it's kind of the same thing. They lost $4 million in 3 months. So, a little over $1 million a month, one and a half, $1 million, whatever. We'll use the low number to be on the safe side. So, why does net loss get thrown off? Well, if you come here, there's just kind of one-off write-off. The change in fair value of stock warrants and common stock adjustments feature. So essentially, if you remove that, you're going to get closer to a $4 million burn for 3 months, and that's going to match up. So, excuse me, we're going to just say the burn's around $1 million a month, 1.1. So if you go through the cash situation, they did raise in June, so they burn $1 million, burn $1 million, burn $1 million, but boom, they add $6.8 million raised. So they would have around $22 million June. So as of this month, they're okay on cash. So if they got $20 million, they're losing $1 million, $1.5 million tops a month. They're okay. So going back to the delisting notice, the stockholders' equity, they're very, very close to being over the stockholders' equity threshold, right? So simple way, look, so you can see here the cash, you got to use short-term investments, $18 million. Stockholders' equity, you come down here and use the total stockholders' equity, $630,000. So, if they're losing $1 million a month, that gets deducted from stockholders' equity, because they're probably not using that money to pay down debt. But that's for another time. So you can see here they raised this $6.8 million. So it puts them over the threshold, right? So they get the delisting notice on the end of this month, right? So yes, the SEC sees it when they filed their, you can see they filed this on the 8th. A couple weeks go by and they get, the delisting notice, like 10 days later is usually what it is. So with that being said, let me pull this back up. So they raise this money, so it helps the stockholders' equity, right? Stockholders' equity, guys, you can take note of this. It's total assets minus total liabilities. As to where net working capital is current assets minus current liabilities. So as of now, we'll skip to the chase. They're pretty, I think they should be able to be compliant. Obviously, again, these burn rates can vary. Maybe they're burning a little bit more. Maybe they're just under 3 million. Maybe they got 3.5. So a little bit of wiggle room. And they can't raise a whole lot of money. So if they are compliant, in my opinion, what's going to happen, and again, this is Friday, August 9th, the first day it's moving. If they want to, they could probably PR in a day or, Monday or Tuesday that, hey, guess what? We're compliant. And, when that stuff comes out on, second or third day, have a move, shorts are comfortable, and a lot of things can happen. If they're not compliant, on the other flip side, they could still raise a little bit of money. So, I had the float around 4.6, 4. 4.5, 4.6. So I'm going to use the high. And this is very similar, guys, to HEB. So remember, on the 12th, they get to use this price, right, until Monday, because the 12th after that, they can't use it. RKDA, same exact thing. Literally the same exact day. So they can use this, I don't know what price this is. What do I have down? 5.9. So if you take the float, because the highest closing price, 590, 4.6 is $27 million, right? So you got to divide it by the 3, and they raised the $9 million. They can raise $9 million. But, right, remember, they raised $7.3 million. Let me jump into this. So right here on this forward 24B, you come down, they raised 7.3. So that goes off the total for the baby shelf, right? So if they can raise 9 million, they raise 7.3. That gives you $1.7 million they can raise today if they use this closing price. Okay, so that's why I kind of mentioned in chat. It's pretty important where they close this. So going back to it, and another thing, that 7.3, you'll notice here I only added 6.8 to the cash level. Pretty simple. Once you pay the underwriter their fee, this is how much the company gets. So basically 6.9, I guess. So H.C. Wainwright making a nice penny just to dump some stock. Another thing with this offering, so they raised 1.4 million shares at 490, right? So that's where the $7 million comes in. In a concurrent private placement, they're also selling warrants, $1.4 million warrants, with an exercise price at $5. So that's a pretty important level. But remember, guys, right? It's a private placement. They're warrants. They can't dump them. Look, they are not registered under the Securities Act. So if you pull out, you come to this S1. What are they doing with this S1? They're just registering shares from the offering. And this is a little bit more because they grant the underwriters some shares. But it even says that here, it's the private placement they completed on 2019. So with this one, guys, I went over this in the very, very first video, which is probably the most important one. When you're registering, warrants or shares from a private placement, all you need is to get the effect. You don't have to file a 424B, right? So you come here, you click the file number, and my internet might not be loading for some reason. They do not have the effect. So these warrants, I don't want to say they're not important, but this $5 level, if it got to it and these were in effect, people would probably be looking to fade it, right? But maybe they hold it up so that, if this gets effect on Monday and let's say it opens at 6 on Monday, just a theory, then they could dump these warrants. And hey, that's a way to raise cash that makes the float bigger, and then you can still raise money, right? So I didn't even think of this. So let's just say these 1.5 million shares, they get effect Monday, they dump them. All right, it probably won't happen. But if you add 1.5 million to this 6.1, and you can use the 590, right? Because when those exercise warrants get dumped, it gets added to the float. Then you get a price 6.1 times 5.9 equals 36. 36 million divided by 3 equals $12 million they can raise, but they've raised 7. So, they could raise $5 million if they dump the warrants. Again, that probably won't happen in my opinion. They probably won't get effect for a few more days. I don't know. Just me. What else was there, guys? So, yeah, that was, that it's fun to kind of go through these hypotheticals. And these are a little bit tougher, right? With the stockholders' equity being at 3 million, that could be 2.7, that could be 3.2. Companies can kind of wiggle around their burn rate, maybe cut it down a little bit for a couple months. Again, it'll be interesting to see where this closes. Right now, it is at 440, so still holding up pretty well. It's about time something moved in the small cap market. What else was there? So yeah, I went over this. Oh, and then this is another thing, guys. So if you click this link, just gonna get this pulled up. this is basically the NASDAQ listing requirements. So you can be listed on different exchanges. So like if, let's say RKDA did not meet those, the 35 million or the $2.5 million stockholder equity in 180 days, they don't just go straight to OTC. There's different tiers on the NASDAQ. So here, you can see for this exchange, you need a market, an MVLS of 50 million, 750,000 shares. You obviously have to have the dollar price. So this is a little bit higher, right? And the stockholders' equity has to be 10. So there's a higher threshold. But say a company didn't hold out and couldn't keep this $50 million, then they could go down to the NASDAQ capital markets, right? This is NASDAQ global markets. So if you can't meet this, you would go down to this, the NASDAQ capital markets. So this is where RKDA is, right? Have to hold the dollar, have to be the $35 million of market value listed, stockholders equity 2.5, and isn't that net income? Yeah, net income right here, and you can read on this. If you don't meet this, there's other ones that you can go to. I don't know if they're listed in this PDF. Doesn't look like it, but there are other ones that have less strenuous requirements too. Other thing was, what was I going to touch on? I'd touch on this, but we don't deal with this a lot. The ALLK. So this is a large cap stock, $3.6 billion. It's a recent IPO actually. Let me pull back this chart. Had some nice gap up on news. They do an offering the second day here, and a couple things with this. Right when they did it, it was automatic shelf registration. So if your company has a float of $700 million or more, or it has $1 billion in securities, you can automatically, every 3 years, this shelf will just automatically register. So the companies we deal with are small. When they file an S3, they have to get effect, and that's because the SEC has to okay it. Basically, this ASR is a pass saying once this thing is filed, and it will automatically file every 3 years, you do not have to get effect, right? You do not have to get approval from the SEC. You can dump whenever, so you do not need an effect. So what happened was they ended up dumping, it was actually a little bit larger than this. I think it was like 7.5 million shares. And Goldman was on this, which, you never want to fight Goldman or big money. And yeah, these are real company, like real underwriters, real investment banks, deep pockets. It's not H.C. Wainwright throwing $4 or $5 million at it. Like these guys, Jeffries, Goldman, William, gave this company $350 million of their clients' money. So, and I forget the price. Yeah, so they priced it well at $77. People were talking, even if you went back to this one. So before they came out with the actual price, they threw out this hypothetical, like assuming a $31 price, like that's great. And, that was right before this huge gap up. So it kind of trapped some people, I'm assuming. Yeah, so they did 4.5. Okay, 4.5 million at 77. Yeah. So again, it's a large cap, real company, recent IPO. These big dogs are behind it. Like, it's easy to say not to short in hindsight, but it's, for me, easier to just avoid the damn thing. So for me, I know this one was a little bit longer. Definitely want to see how RKDA plays out. So even though, guys, they have $20 million of cash, right, and they don't necessarily need to raise a ton of cash for purposes of running their business, they do need some money to get the compliance, and that's why I say like these things are funky. It's much more complex than just a dollar deal listing. So hopefully you guys enjoyed this one. It was a little bit longer. I probably repeated myself a lot, so I apologize. Shoot me a DM if you have any questions or if I'm wrong on anything, which I'm human. So have a nice week, guys, and I'll see you in chat Monday.